In this video, we are going to talk about the special decision that management may need to make regarding outsourcing of their part production. So this is often referred to as the make or buy decision. So when we talk about outsourcing, we're talking about a procurement of some sort of product or service from an external source. Now, of course, this depends on what the company actually is in the business of producing, but in many cases they have the option to make the part internally, which in most of the textbook examples, that's what they've been doing for years. And then somebody comes along and offers them a special price to purchase it from an external supplier. So there are a variety of reasons that this company may decide that outsourcing is a good idea. First of all, they may be in a situation where they can no longer maintain the specialized resources internally. So now this could be simply labor. Maybe they don't have the people that can do this particular thing down the road. It could be that the machine they've been using for the past to build this particular part is now becoming obsolete, and instead of buying a new piece of equipment to do it, they are electing to consider outsource. It may be a situation where we want to free up our internal resources for other purposes. So it could be the equipment, it could be the labor. We don't want to use it for this particular purpose anymore. Instead, we want to use it for another purpose. We could also be taking advantage of specialization of other companies. So a good example here would be a computer manufacturer. They may be very good at manufacturing the computers, but they may not be an expert at the computer chip manufacturing, the processor itself. So they may elect to go outside of their company to buy the processor that drives their particular computer. This could also be a situation where they're looking to improve the company's focus. Instead of trying to focus on several things, they're going to actually focus on what's really important to them, the core components of the product. Now, when we talk about this decision, a lot of times we look at it from a financial perspective. So in this case, they could simply be looking to reduce the operating costs, but that's where the challenge comes in. We need to identify whether they really are saving money or not. So we're going to go through an example to talk about the different types of costs and which ones would be relevant to this decision. So let's take a look at this example. We have variable costs per unit including $3 of direct materials, $1 of direct labor, $2 of variable manufacturing overhead, and $1 of variable selling general and administrative. So just with variable costs, we have $7 right there, 3121. But remember, we always have to factor in the full cost of these parts before making a decision. So the fixed cost per month, we have $20,000 for manufacturing overhead, and fixed selling general administrative, we have $8,000. So we can't completely ignore those fixed costs because we're still going to have them. Whether we decide to continue our operations or whether we decide to outsource, we will still have those costs. So we said that our internal cost, just the variable cost, is $7. Now, external suppliers, some other company has offered to supply the component part for $9. Now, that's above our variable cost by $2, but we don't know yet how much our total fixed costs per month are on a per unit basis. Furthermore, we have another situation here where outsourcing, if we decide to have this other company produce that product for us, it says we would eliminate $2,000 of the fixed expenses. So we have $28,000. We're eliminating $2,000. That's not all of them, but it still helps a little bit. Now here's the key thing to this particular problem. It says that normal production is 4,200 units per month. That gives us a number to divide our overhead by to identify how much really relates to each unit. So now we're going to compare the two options. So we're talking about 4,200 units. That's our range of operation we're trying to go for. So we're going to compare the make or make internally option, what are all the costs that we would have if we made it internally versus the purchase option, again, just the price for 4,200 units. Now keep in mind we are looking at relevant costs only, so it's not going to be every single one of those costs that we had before. It's just going to be the ones that would differ under the various alternatives. So for make internally, if that's the only decision we make, we're going to have 4,200 units at $3 per unit. It's going to cost us $12,600 for direct materials. Direct labor, $4 a unit, it'll be $16,800. Variable manufacturing overhead at $2 per unit, it'll be $8,400. And now the fixed overhead is the key thing here. Notice that we're only including $2,000 of fixed overhead because the rest of the overhead is going to exist no matter which decision we make. So it's an irrelevant cost. We only want to include the costs that would exist only under this one scenario. So now we're saying that this $2,000 in fixed manufacturing overhead would only exist if we decided to make them internally. Because under the purchase option, we're getting rid of $2,000 of overhead. So in total, we have $39,800 of cost if we decide to make this internally. Option 2 is the purchase option. We take the 4,200 units multiplied by the $9 price that they're offering us. That only ends up being $37,800. So that's actually a cheaper way to go than making this internally in this particular situation. Remember though, we're going to have the other fixed overhead in both situations, so the true cost is going to be higher in both situations by the same amount. But our overall decision would still be true that making internally costs us more. Another way to do this would be to identify the per unit costs for variable and fixed. In other words, take your fixed total costs divided by the number of units. But again, we only want to include the fixed costs that are going to be different. So this way we know a per unit cost compared to the $9 per unit cost that they're selling it to us for. That's just another way to do it. Hopefully this helped to clarify the topic of the make or buy special decision. If you have any questions, please let me know.